As every Monday with a narrative watch. So, narrative watch is basically a series where I look at some emerging sentiment shift, right? Some kind of shared sensibility that's on the rise. And this week we're looking at something which I think is more an observation about the a change in disposition or a refining in disposition of the Bitcoin community and the larger crypto community that I think was shown off last week. And so we're going to talk about time preference a little bit. So just by way of introducing this concept of time preference, it's a tweet from just yesterday. So American Hodl says, this is what low time preference looks like. Trace, who's referring to Trace Mayer, is a billionaire and he buys his shoes in the clearance bin at Payless. He's actually kind of making a joke about a photo that went up from Trace, where he's in a photo with Pomp and Caitlin Long in Wyoming, and he has kind of just very basic black like trainer sneaker style shoes, right? And so Trace says Bitcoin brutally teaches lessons on time preference and opportunity cost. My beautiful shoes cost 100 plus. Remember the poem during the Great Depression. Use it up, wear it out, make it do or do without. And he has a whole graphic. So the idea of time preference is it has to do with the current or future value of goods, right? Like what value you place on receiving a good now versus receiving it later. And so the idea of high time preference, it's just from the Wikipedia because it's a useful heuristic. Someone with high time preference is focused substantially on their well-being in the present and the immediate future relative to the average person, while someone with low time preference places more emphasis than average on their well-being in the further future. So this concept of time preference is not unique to crypto, right? It's a part of economics. It's particularly a part of like Austrian school economics, where there's a real emphasis on low time preference, not just kind of from an individual consumption standpoint, but from a long-term where the value to society standpoint is, right? Like in a lot of ways, the central nub of what the Austrian economic school kind of disagrees with the way that the economy has been structured is everything in the kind of mainstream economy, according to that line of thought, is about consumption, right? Immediate consumption, immediate gratification. Whereas basically delays, saving, investment in the future, that's kind of where they want to be, not only from the standpoint of the broader economy, but also from an individual standpoint. So not really here to litigate that at all. But the interesting thing, I think, has to do with the way that it's played out in the context of the Bitcoin and crypto community. So, books like Saifedean's Bitcoin Standard obviously spent a lot of time on this idea of time preference. And it's a big part of particularly a lot of how Bitcoiners think about the world, trying to kind of optimize for low time preference versus high time preference. And how part of how that's manifest is obviously the HODL ideology, right? Where you are not about kind of short-term trades and short-term price fluctuations. You're about those long-term development of an asset, which you believe has fundamental value because it is, a digital gold, because it is a counterweight to money printing, because of whatever millions of reasons there might be for being really interested in the future of an asset like Bitcoin. That's where you're focused. And so the interesting question is how much this actually is what this fights against within the larger crypto community from an action standpoint, right? So if someone kind of professes low time preference but then gets stressed out about short-term price fluctuations, there's sort of a contrast, right? If someone is all about the short-term volatility and making trade, that's not really like a low time preference type of activity that's focusing on the future. And that's not to say that there's it's completely incompatible to be a trader who takes advantage of short-term movement, but to generally be a person who has kind of a low time preference, long-term point of view. But the point of all this is that this really shakes out, and it's in the times that the market is not going well, right? It's really easy to be low time preference when there's a slow, gradual ascension of the asset that you're interested in. It's not hard to just keep holding because the price keeps going up. It's much harder to be low time preference when things are going really badly, right? And so what happened last week? Well, obviously, if you're watching this, you know, you don't need me to re-explain that there was a massive downward movement in the price. On Tuesday, I think it started. It went basically down like 20%, right? From just above 10,000 to just below 8,000. It has been kind of hovering around that 8,000 range all all week, basically, and all weekend. And so there were tons of assessments, obviously, about what it was about, right? So this it made the Independent article, and an analyst said pessimism over the level of activity on Bakkt sparked this most recent sell-off. However, it was the liquidation of 600 million worth of long positions on platforms like BitMEX that caused the price to dramatically slump by over $1,000 in a 30-minute period. That's maybe true. I mean, this is a smart analyst, Simon Peters from eToro, but it's kind of, I think, claiming that you know exactly is maybe not exactly the right position to take, given the just the lack of the opacity of these markets, let's say, right? So anyway, so this crash happened. A huge amount of value was gone really, really quickly. And so I jokingly wrote this tweet that Twitter stages of a dump, right? And so number one was basically the holy crap news tweets. Number two was schadenfreude from haters, right? You got to see those haters coming back in. Number three was the volatility memes. Number four was the hodl memes, right? Getting people to steal their resolve. Number five would be the TA explanations, right? The descending triangles that cause this. Number six would be the macro explanations. It's, a larger fear about this thing or that thing, right? Number seven was the more hodl memes, or maybe buy the dip memes, right? Where people still really figure it out. And number eight was reset to new normal, right? Where, okay, I guess 8,000 is the new normal, right? That's where we hover around. And then nine, crazy rip up, and 10 is repeat. So I was kind of joking about this, it was a little tongue in cheek, but then of course, at least, the first one certainly happened. Everyone was like, holy crap. The second one started to happen. So you had Peter Schiff getting in on the game from the Schadenfreude game. Bitcoin has finally broken below the support line of the large descending triangle it has been carving out for months. Hey, look, he grabbed a little bit of that TA explanation too. This is a very bearish technical pattern, and it confirms that a major top has been established. The risk is high for a rapid descent down to 4,000 or lower. Nouriel popped back in as well. He hasn't been around for a minute. Bitcoin and shitcoins crash continues. BTC down over 20% this week. So you saw all these things, right? And then you started to see something different, which is, kind of on the steal your resolves, right? Important message as we enter the next bull market. This is from Pomp. BTC is very volatile. You can lose all your money. Only invest what is okay to lose. Twitter is not investment advice. Don't buy BTC with credit cards. Keep low time preference. Do your own research. So this is all within like a matter of hours, whatever, minutes or hours after this huge price action happened. And a really interesting thing happened. And now we kind of are moving into the realm of just my observation. So you might have observed something totally different. It could be my filter bubble, and I acknowledge that. However, there was a shocking, and I mean shocking, lack of stress about this relatively significant price shift, right? You didn't see... you would have anticipated, I think, much more frustration, nervousness, just general kind of insecurity around the lack of a clear explanation. And I just don't believe that you saw that, right? So if you actually jump over to Long Read Sunday, my every week curated session, a huge amount of it, like in fact, most of it was not actually about price last week. You saw a huge amount about Libra and about just the rise of government digital currencies. I mean, even on Squawk Box, when they had Pomp on, he was talking about tokenizing the US dollar and kind of the global battle for digital currency supremacy. You had the IMF talking about synthetic currencies. You had a ton of people talking about surveillance problems, right? So Neeraj is talking about surveillance in the context of the central bank digital currencies. But then we were also talking about speculation in the context of, we were talking about the this worrisome development that it seems like the UK authorities will be able to, will be forced Facebook and WhatsApp to turn over messages. You had people who were fighting a potential ban from the Financial Conduct Authority in the UK. You had just all these interesting things. You had new companies launching, right? So all of these things were going on. And honestly, it wasn't even like we had multiple day cycles of headlines around the price news. It was really just that first day. It happened. It stayed right at that level, and people moved on with their lives. And I think that that's fascinating. And so the question is why. And why not why the price crashed. That's actually incidental to what I'm talking about today. But why were people just so less stressed than it seemed like? And so a couple of potential answers on that. One, it could just be the fundamentals, right? So Hans from over at Ikigai did this great thread which went viral, basically about the fundamentals. So he says, apparently some people are worried about Bitcoin. I don't know if I can help, but let's look at some data. Here's a chart of the 365-day moving average of the number of transactions on the Bitcoin network. Looks like we're at an all-time high. He then goes on to miners. Okay, let's check the hash rate. Maybe the miners quit mining or something. Nope, actually that's at an all-time high as well. Then he goes on to the inflation rate. What about the inflation rate? Did we suddenly increase the supply? Right on schedule and falling in log scale over time as expected. And then he goes on and he goes on and he goes on. He talks about the larger macro economy. He talks about the pull requests, and sort of the idea of developer activity. So he says, I don't know what to tell you guys. From a fundamental perspective, Bitcoin looks great. I guess it's back to hodling, right? So one possibility for why people weren't stressed out is that this is all familiar to people, and that this movement simply didn't feel, particularly causal or reflective of larger forces, right? It just was a price shift, and maybe it was backed, maybe it was something else, but it didn't fundamentally undermine any of these core attributes of the thing that they believed in, right? So that might have been part of it. Su Zhu, I think, actually had a really interesting point here. He says, have thus far refrained from joining the last time club on crypto Twitter since we broke 10K. But this dip feels to me like the fuel we need to flush out over-leveraged longs, punish the shitcoins, and target much higher levels from here. So basically, he's saying that this is actually an important correction, that it's a healthy market movement because it kind of is going to get some amount of that high time preference activity out of the market. That's a different way to kind of put it, right? And really focus on those folks who are in it for the long term. And there was a little bit of this type of chatter that I thought reflected that as well. So you had Ben DiFrancesco over here saying, I don't own very much crypto, much less than you'd best guess based on my enthusiasm. I actually only invest what I can afford to lose. This isn't good advice just because you avoid risk of ruin. It also gives you strong hands. Market is tanking. Who cares? I can hodl in peace. And that, I think I saw a lot of people who are saying similar things. Dudas from the block said something similar, right? Bitcoin is sincerely the only significant investment I've ever made that I've never doubted. I watch the price gyrate up and down, inevitably bottoming ever higher. And I smile with the satisfaction of knowing I'll be even happier in 5 years, 10 years when I retire. So the point here is just that, it's one small, or relatively significant, but overall in the scale of things, small price movement. It is still, it's a correction down from, the 2.75x the yearly lows that we were, when it was around 10K to just 2x. We're up 2x on the year from, 4K type of bottoms. So maybe it's just simply that people are still feeling relatively good about how 2019 has gone for Bitcoin in general. But it does feel to me like it may be actually something more, which is that over the course of the of kind of last year's bear market, that obviously flushed a huge amount of folks out of the industry, right? And we've seen that. We've seen lots of people who have left, who have gone on to different spaces, gone on to whatever. This year, when we had that price rip up, from 3.5, 4,000 all the way up to almost 14 and then back down to 10 where it held for a while. It feels like that didn't necessarily reflect a huge amount of new people coming into the market who were going to be shook the first time things went down. It's been, I feel like, more substantive, and the people who have come into the market have come in, I think, by and large, for more ideological reasons. Like we saw Daily Dirt Nap come into the market a few weeks ago, Jared Dillian, who basically said that, radical political shifts were driving him to Bitcoin. He wasn't a Bitcoiner before, now he is. We've seen people like Raoul Pal and Dan Tapiero come into the market because they think it's a generational hedge, effectively. Dan even was back tweeting about the reason to hodl Bitcoin yesterday. So the point of all of this is to say that to me it feels like there's been some amount of time preference transformation, and maybe it's not a time preference transformation among individual market participants, but maybe it's just that the market participants who are involved right now, who are kind of the loudest, the most vocal, who set some amount of the sentiment and tone in the Bitcoin and larger crypto space, simply aren't fazed by this type of short-term price action. I think if that's the case, it's a really, really positive thing for the industry. And that's, I guess, the point that I want to leave on. Last week, the most interesting thing to happen wasn't the price movement. It was, in fact, things like the SEC testifying before Congress about Libra and about cryptocurrencies. It was things like the European Central Bank saying that Libra was a starting gun. It was these questions for around privacy and surveillance as it relates to WhatsApp and Facebook Messenger. Right? It was these fundamental things about the shifting structure of society and the role of Bitcoin and cryptocurrencies to address problems that are either with us or are coming fast. So I am all for this time preference transformation. I love seeing this shift away from kind of wild, volatility reflected on crypto Twitter and on Bitcoin Twitter. I just think it's a really positive thing. So I wanted to observe it on Narrative Watch, and yeah, that's going to be that for today. 3 at 3 back as usual tomorrow. It looks pretty clear that we might be talking about the crypto ratings consortium or whatever it is from Coinbase and all these other exchanges who are giving a 1 to 5 score on decentralization. But for now, guys, appreciate you watching, appreciate you listening. Thanks to Messari for hosting this and for distributing it, and I will see you tomorrow.